Well, you should be seeing me in just a few seconds if we're working correctly. Let's get this onto Discord. All right, fantastic. So, there we go. Rocking the Disney villains right now because hey, Disney villains rule. I probably should have put Disney stock in the title, but it hasn't really moved a whole ton lately, so it's not as exciting to talk about as everything else. Hopefully, everybody's had a good week this week. Ended definitely very strong. I was up around 2% just Friday. So we definitely had a pretty strong finish. I was pretty satisfied with how most of my holdings were doing. And now, well, it's Saturday. This is the day where we do the Cash Flow Kings live show at 8 p.m. Eastern. So that's pretty important. One of the biggest rallies I had, actually, on Friday was Amazon. In terms of dollar amount and percentage up, it just went absolutely bananas. So obviously pretty satisfied with how that went. I still firmly believe that Amazon is the best of the Magnificent Seven. Some people call it the Magnificent Six now. They exclude Tesla for reasons. But I'm only in Amazon out of those stocks. I would also not necessarily be opposed to being in Google at some point. Definitely think that it's also an interesting proposition. Heck, the government's going after them over monopolistic qualities. So clearly they're doing something right as a business if they're dominating in that way. But I still like Amazon at this price, okay? I'm still accumulating. My plan is to try to accumulate up to at least 100 shares before the stock gets back to 200. I am a firm believer that it is worth 200 plus, and we'll get there, and it's only a matter of time. People called the last time it touched 200 and then retracted the Bezos wall because I know Jeff Bezos was selling off some stock, which it makes sense. If most of your wealth is tied up in one name, and if you're a founder of one of these mega companies like Bezos or Zuckerberg, it makes sense that you would want to trim back a little bit over time and, have some money in cash, have some other holdings. You don't want to have literally all your eggs in one basket, no matter how good that basket is, right? Even the highest quality basket isn't necessarily 100% safe. Random bad things can happen even to high quality baskets. So I understand that. I don't think that it shows like a lack of belief in the company long term if the founder who has 90-something% of their wealth in the one name decides to sell off a few billion and get into some other things with that money, or to just keep some cash. I mean, the 5% or whatever they can get on treasuries it makes sense. There's nothing wrong with that. Now, people have been sleeping on Grab. This week has just been pretty much a nothing week for Grab. Grab is almost criminally underrated in my view. So analysts have it as a strong buy rating. And this is one of those cases where they actually, I think, have it right on a lesser known and sort of undercovered stock. I'm surprised that analysts actually have this one on their radar so much. Now, the funny thing about the revenue growth, yeah, it's decelerated to the most recent quarter being a 17% compared to comparable quarter prior year. But this is actually within management's guidance. So that's good. And actually on a constant currency basis, it was higher. They lost, it was like 23% or something before they had to convert to dollars. I appreciate that, Arya. And so the difference there from 23% to 17% was literally just converting currencies. And by the way, Arya in the chat there is going to be on the live stream at 8 p.m. on Cashflow Kings Live. So make sure you're there. That's very important. I cannot stress that enough. There's a lot of things you could be doing on a Saturday night. One of them should be Cashflow Kings Live. So Arya, just out of curiosity, I know that you have a little bit in Uber. Are you thinking about Grab, or are you just content to keep your exposure to them through your stake in Uber, since they have a stake in Grab? That would be the question I would ask you. For me, there are a lot of parts of Uber, or not a lot of parts, but there's a specific part that I really actually kind of dislike. And so I went with Grab instead. And I think part of what keeps the share price down is probably the fact it is lesser known, and it's not based in the West. It's based in Singapore. And they operate in definitely some more emerging or developing areas. Though Singapore is definitely a first world country. They have a very high per capita GDP, competitive with the US and other Western countries. But I'm a fan. Now, obviously, their price to operating cash flow is a little bit more pricey than Amazon, which is at like 17 or something right now. Grab's at a 23, but I think that they've got so many chances to grow their cash flow that doesn't really bother me that they have that in the low 20s. I think that they'll be GAAP profitable sometime in 2025, I think, is what they were talking about. So, yeah, I think we're going to be rounding some interesting corners with Grab pretty soon. But there's certainly, I think, not a terribly high amount of risk. I'm a big fan of these robust balance sheets, right? Net cash, $4.63 billion. These are in US dollars. So with that amount of net cash, which means they could pay off any small amount of debt that they do have and still have that much in the bank, compared to just a $12.75 billion market cap. So this is not a mega cap company by any means. And they've got a ton of cash in the bank. Like, the amount of cash they have in the bank is actually comparable to a lot of American companies that are multiple times this market cap. So they've got a very, very, very strong war chest. So who is going to really come in and try to outcompete them in Southeast Asia and try to overcome them? Uber's not, because their CEO is on Grab's board. And they gave up all their Southeast Asia operations to Grab in the deal. They got some equity for it. So all they have are basically single country competitors in some of the places they operate. Those single country competitors, I would guarantee you, and I don't think any of them are publicly traded. There may be one somewhere that is, but most of them, I would say, probably are not publicly traded. But I would be willing to bet a substantial sum that none of them have the billions of dollars needed to actually stand up to Grab and steal market share from them. If any of them gets too big for their britches, Grab could just compete with them on price, and in a war of attrition, they would win, or buy them out and integrate them into their own ecosystem. Like, they're the what Blake Downer would call the apex predator in their market. I like apex predators. So, yeah, Grab is one of my favorite stocks for all of those reasons. Now, $7 might be a little expensive for them, but if the growth and whatnot come to fruition that are supposed to, and the profitability keeps going the way it's going, I could see it hitting that price. It really is quite an interesting company. So, yeah, very happy that I've got this in the portfolio, and anybody that still wants to accumulate should be happy that the market, for some reason, sleeps on it in spite of how strong their earnings results have been and everything else. Now, MPT, there's been some more conversations on Discord, by the way, link in the description there, regarding the bankruptcy. And essentially what it seems like is they're basically exchanging some value in certain hospitals in Florida. The Space Coast, they're calling it. Reminds me of Space Ghost Coast to Coast, if anybody remembers that show. And they're essentially trading some value there in order to basically take over the rest of the hospital operations and get the freedom to put in interim operators while they work on transitioning to new permanent operators with new leases on a lot of their hospitals. So basically, it seems like they're doing what they've got to do to just get Steward the heck out of their real estate and put other operators in. So after a period of time, I don't know how long that process, by the way, will take. Weeks to months, maybe. But at the end of it, they won't have single tenant exposure anymore. So there'll be no more tenants where they've got 20+% of their assets leased to a single entity, basically, which is preferable to where we've been at the last couple years. Because if that one tenant struggles, you end up in this situation. They've navigated other tenant bankruptcies in the past, and Steward may be bigger, but MPT has the experience with hospital real estate. So I'm not lacking in their in confidence in their ability to navigate it and see it through out the other side. Sometimes people get irritated or impatient. They think that there's a lack of transparency sometimes from Medical Properties Trust in terms of what they will or won't say in their conference calls. But I think it's easy to forget as well that this Chapter 11 they have with Steward is an adversarial process, right? They have to jockey for position against other creditors of Steward that want to get their debts made whole. The debtor, which is Steward themselves, wanting to stall things in order to structure better deals that give them more liquidity to make whole those other creditors so that they might survive the restructure process. And the attorneys that represent Steward, they're obligated to try to make sure that their client somehow survives the Chapter 11, as unlikely as that seems like it is at this point. And the other creditors, the FILO lenders, etc., the ABL lenders, they're all also, their attorneys are obligated to try to get them better positioning on basically picking apart the pieces of Steward to make themselves as whole as possible on any money that they lend. So considering that that's an adversarial process, it would not be necessarily prudent for MPW to always be extremely forthcoming with exactly what their strategy actually is, because the opposition, the earnings calls are public. The opposition can listen to the conference call, and I'm sure that they actually are. So sometimes that leads to them being kind of vague, talking about these other interested counterparties for certain deals or other operators that they've marketed to and things like that. But they don't name specifics a lot of the time, which you probably wouldn't want to do if you have an adversary that's potentially working against you. And given that a Chapter 11, where you're one of the major creditors, you have many adversaries in that case. Not to mention the short sellers, right? Granted, Hedgeye bowed out. So, Reet Rob, a.k.a. the Donkopotamus, is no longer actively keeping this on his short list, though they do definitely still occasionally make negative mentions on the Twitter. Although I'm blocked actually on the short sellers Twitter, at least Rob's. Don't know about the other. He may not have blocked me on Twitter. He might not know I'm on there. So yeah, it's kind of funny. But by the way, speaking of Twitter, you should follow me there. Link is in the description. I don't only discuss investing on there, but investing comes up a lot. It's a passion of mine. So another interesting, there were some interesting developments with Alibaba as well this last week. So the Chinese regulators were basically standing on their necks for the last 3 years based on anti-competitive practices or whatnot. Yeah, believe it or not, the authoritarian single-party government in China has a problem with monopolies in their businesses. The irony is thick on that. But basically, there was this sort of choose one philosophy that they had with merchants on their e-commerce, where they were forced to choose either just them or just a competitor. They weren't allowed to cross-sell across platforms. It was like part of the agreement that they had with their merchants, and they kind of threw that out. That's not allowed anymore, and they basically have been under a microscope the last 3 years to make sure they don't do anything else that's uncompetitive. And now, like, I guess the probe is over and they're happy, they're satisfied or whatever that Alibaba is, they've been good boys over the last 3 years. And because the regulators are kind of not disappearing entirely, of course, but they're sort of backing off a bit, they're happy that Alibaba has learned how to behave. The market is responding a little positively. We got a little bit of a bump in BABA. And this is one where, Michael Burry is in it. I don't think a lot of other super investors are in the Chinese stocks the way Michael Burry is. Certainly, I don't think you would see like a Berkshire buy of Alibaba, but I don't think that somebody like Burry would do it for no reason. And it seems like his timing was pretty solid. Basically, end of last year, he got in, kind of started accumulating at a pretty low point in the stock's price. Because, let's see. Yeah, we look back to kind of late 2023, early 2024. Yeah, he had some good opportunities to accumulate cheap. And he's probably done quite well. I mean, maybe not smashing the market or anything, but I would say he's probably up on his stock at this point. I'm up a little bit on mine as well, but I got in. I actually got in late 2022, so I'm almost 2 years into holding Alibaba, and it's gone basically sideways the entire time, slightly up, giving me a few dividends along the way, but nothing to write home about. Certainly, though, I think a rally is possible if the macro in China were to... greetings, Richard. Good to see you there. If the macro in China were to improve, it has been a little bit weak. The economy there has been in a bit of a recession. There have been some problems with the real estate market, etc. So it doesn't surprise me that it's been a little bit of a drag on some of their stocks. And of course, people have problems with the ownership structure in Baba. Now, the ownership structure was the same when the stock was at $300 back in 2020. Did you hear people saying this is a scam stock and because of the ownership structure it's too risky, etc. back then? Probably not as often, if I had to guess. I wasn't really watching it back then, but that would be my guess. Now that it's fallen so much, well, now the ownership structure is scary and a reason to stay away. Interesting. But if that was a really, really major point of concern and a big, big risk, I'm at least within the next handful of years, I don't think Michael Burry would be in it. At least if he was perceiving that as a risk. He could be wrong. He's not infallible. There is nobody infallible in the market. But it makes me slightly more comfortable with my position that it's shared by somebody of his level. Maybe call that borrowed conviction. I don't know. Now, their total shareholder yield is over 5%. And this is only made possible because of how cheap the stock is. They can buy back 3 or 4% a year at these really cheap prices with relative ease. They have the money to do it. It's pretty great. Of course, I'm happy that they accelerate the buyback. Now, if it went back up to like $150, $200 or something like that, I would not want them doing buybacks in that situation. So just to be 100% clear about my views on that, I like the buybacks when it's beaten down and cheap. Don't like them as much when it's expensive. That's just kind of the way I feel about it. I think when the stock is expensive, maybe allocate more towards the dividend or even just hold more cash. But save the buybacks for when the stock's cheap, And I think we had PayPal in the description and the title and stuff too. Now, this is another one. Shareholder yield above 5%. Now, this is all buybacks. There's no dividend on PayPal. Alex Chris is a hell of a CEO. Now, my cost basis on this is about $59. Granted, I'm not... I haven't made like a crazy amount of money on it, but I think at this point, the future is looking about as optimistic as it has in the recent past. when you talk about PayPal a year ago, almost everything was negative. It's a dead company. There's no growth left. Have you heard of Apple Pay? They're going to destroy PayPal. Have you heard of Cash App? They're going to destroy PayPal. Even, ironically, have you heard of Venmo? They're going to destroy PayPal. By the way, Venmo is owned by PayPal. That's the height of irony saying that, but people said it. People have said it in comments on my own videos. But look at the massive run up and then fall from grace. Now, just like Alibaba, I really don't think anybody should have. I don't think anybody had business paying $300 a share for this. I like PayPal. I think it's a good business. I think the current CEO is great, and I think there's a lot of positive things about this. But $300 a share was never, in my mind, justified. Even though maybe the growth looked faster or better or whatever back then, you can't just extrapolate the best possible growth, which, by the way, they were going through, like any company that was getting a COVID bump in their revenue, you should 100% expect that even if it keeps growing from there, that it's probably going to decelerate some. Okay? And here's the thing, their revenue never actually retracted. The growth just didn't keep accelerating. Okay? They got a big COVID bump, right? They got a big COVID bump. Like, that was looking pretty juicy. And okay, so 21.4 to 25.4, like that's a pretty big jump. 25 to 27, and not quite as much, right? So it slowed down a little bit, but it did not stop. It just didn't keep going at the same rate that it did. 2019 to 2020 to 2021 looked really especially good. But this is by no means bad, right? I mean, you tell me, does this look like a dead company that the competition is stealing all of their market share? Is that what this looks like? Make that make sense. But then you'll say, but wait, but the margins. So there's something to be said for the margins. So no, their growth is still good. And the stock is still so cheap that they ought to keep buying back shares, I think, with anything that they can't reinvest back into the business. But their growth is still good, right? I mean, 8-9%. Seems like the last few quarters it's been 8 or 9% compared to comparable quarter prior year. I wouldn't call that low growth. I know people are spoiled by Palantir and Nvidia doing 30 or 40% or whatever every single quarter, but I certainly don't consider 8 or 9% compared to comparable quarter prior year to be bad growth. Certainly outpaces GDP growth and that kind of thing. Now, the margins were like an area of concern for some people, right? Because obviously they used to be 47, 48, 49, that area. And they came down and kind of like got stuck in this 39 area for a bit. And they popped back above 40. And I know that's been a priority for Alex. But Braintree definitely isn't as high margin as other parts of the company. And that has been where a lot of that growth has come from. So if where you're getting your total growth, your 7, 8, 9% revenue growth, most of it's coming from a segment that's not quite as high a margin. Yeah, your margins will take a little bit of a haircut, but in the long run, they should be fine. You think there'd be more people interested in the first place if they did have a dividend? Like if they just added like a 1%. So like call it between 60 and 75 cents a share per year or something. Something in the neighborhood of 1% yield. You think that would drive interest in the stock? Or even so 30 or 40 cents a year, you think? I mean, maybe. It could. But me, I'm honestly pretty happy to see the buybacks, because if you think about it, when the market does realize like, oh, hey, this business is still growing and it still produces a lot of cash flow. It's not dead at all. And the shares outstanding have declined substantially. All it does is increase my ownership without me getting taxed at all, because dividends in practical terms are not necessarily going to be taxed for most people in most situations, but potentially a more tax efficient way of growing your stake is through the buyback. And it's so passive too. Like the buyback, you don't have to do anything. You don't even have to enable drip on your account. But I do get what you're saying. Like people like to see cash hit their account. There is something to that. There is an appeal to it. I understand it. Heck, when I get a dividend from a company I own, I enjoy it, right? It's like, ooh, they paid me. Sweet. That was money I didn't have to like grind for or trade my time for. I just passively, I happen to own these shares of this company and I'm getting a piece of the pie. Feels good. Feels good. Absolutely feels good. I think we're going to start to see these price targets actually move up with Alex Chris as CEO with some of the things he's done. Oh, what is this? Honestly, I think even these numbers on EPS growth, I think they could potentially even do better. If they're buying back shares this cheap, that'll drive up EPS in addition to just what they grow organically. And of course, one cannot sleep on the PayPal balance sheet. Now, this doesn't seem as impressive as what you see with Grab, but still, like on net, there's not really any debt. They have more cash than debt. So, and the reason probably that that's so low is they are probably using most of it for either growth or for buybacks, which makes sense. So I do agree with you that that perception does need to change on PayPal, Danny. I think people need positive PR to feel comfortable getting back in. You're right about that. It's been because there are a lot of people that bought it at 200 or 300 or whatever, even 150 maybe, right? That feel really burned right now because they're down. If they're still in, they're down a bunch, or if they're out, they took a big loss on the way down. And they're like, well, I see it used to be this price and now it's only $72 still. I understand why they feel negative about it, but that price was so inflated. It was just way beyond the realm of reality. And I think people struggle with the idea that you look at a 5-year chart of a company and see that it's down on the 5-year chart, down like 70-something% from the all-time high. And yeah, in spite of that, it's a growing and actually good company that is actually a good buy now. Like a good stock wouldn't drop 70% from their all-time high. Well, what if that all-time high was stupidly overpriced and nobody ever should have had any business even considering buying it at that price. But instead of saying, oh, the market was just wrong to price it this high, it's no, they became a bad company somewhere after this point. Sorry to make you feel called out, Danny, but I don't know that I could comprehend 220 for PayPal. Like there's just something in my mind that just would not. Like maybe if you were convinced they were the next Visa or MasterCard, but it's a bit different from that. One thing I do like about them though is the fact that rather than moving physical goods around, they simply enable money to move around and take a cut of every single movement that happens, which that is something they have in common with a Visa or a MasterCard. And I do think that is overall a much better business to be in than one that relies on literal physical goods, right? They're one of the few major companies out there that actually have like an interesting use case for crypto. I don't believe crypto themselves are actually good investments, by the way. I know I'm probably going to lose a few people by saying that, but I think it's an interesting technology that companies like PayPal can find these interesting use cases for to reduce their own transaction costs and thereby drive shareholder value. And they have PayPal has like a coin or a token or whatever you want to call it that's pegged to the US dollar that helps them enable basically transactions, like foreign transactions, but save on exchange fees basically. Because if the transaction is done in their crypto coin or whatever, it basically bypasses that mechanism of having to pay the whatever the exchange fee is, or bypasses PayPal having to pay the exchange fee to somebody else. But I think they still charge like some type of a spread or a fee to the like actual user, but it can be less because the coin makes it cheaper for PayPal. It's pretty cool. It's a pretty neat out of the box kind of idea and a way that you can use something like a crypto to facilitate some other type of business. But I don't think a crypto unto itself that just trades on Coinbase or whatever, I don't think there's any real purpose to owning any of that really. Like not as an investment anyway. You can use it. It can be somewhat useful as a medium of exchange if you want to do something that's maybe outside the normal financial system. There's a lot of types of things where the people selling certain things will accept crypto as payment, but it's usually not stuff you can talk about in polite society. So when they say things like, oh, crypto is just money for criminals, well, in a lot of cases, that is actually the truth. Funny enough. But that's not the only use. PayPal's use is actually it's probably one of the few actual legitimate business uses I've ever heard. I haven't heard of other major corporations finding a way to use that blockchain technology in a way that actually helps a real business need or saves a real cost in a business. So suffice it to say, I think the people running PayPal, especially Alex and Chris, are very smart. They're very smart. They're not like me. I'm not very smart at all, according to some. Because I don't believe in the power of high yield investments like YieldMax. Well, Richard, no, I'm generally not afraid to say exactly what's on my mind. Just acknowledge. I'm realistic and acknowledge when an opinion might be a little unpopular out there. I think it's always more popular to chase after the shiny object in the room, whatever that is. So if Bitcoin is up a lot recently, you're going to probably get more traction pumping up how amazing and wonderful it is and how you're all in on Bitcoin, regardless if the logic behind it's flawed or not. Because there's a bunch of other people that are also very interested in that, and it seems easy when it's going well. And hey, there's a guy named John that runs a self-defense based channel, and he always says that results, a good result or getting lucky is a heck of a deodorant, meaning you can do things all ass backwards and wrong, but if the end result, you get lucky and the end result ends up good, that's a heck of a deodorant. Like, it's hard then to go back and say that it was a mistake, right? But I definitely do think that trying to paint things like Bitcoin, Ethereum, Litecoin, any other name your coin as an investment vehicle, a store of value, whatever you want to call it, it's questionable and I think a mistake. Now, if you got in before it became a popular thing, somebody today will pay you more than what somebody else would have paid you years ago. That's true. But that is essentially just greater fool theory, where you bought a thing on the expectation that later somebody else would pay you more for that thing. It's not as though these things produce something for you. They're a non-productive asset. They're inert. They're just strings of code generated on computers, basically. Yeah, I don't parallel park all that often, Ryan. So buy, sell, hold, Kroger, Target, Walmart. Ooh, that's tough. I haven't looked at valuations on those lately. Maybe buy Target, hold Walmart, sell Kroger. The thing is, I actually patronize all of those places, right? I do some grocery shopping at Kroger-owned locations. They have a pretty cool fuel rewards thing. I'm able to fill up my tank for cheap. Target is when I feel like going where the Beckys hang out. And Walmart, I don't love the actual Walmart store itself, but Sam's Club I love. And Walmart is hella convenient, and Walmart.com is useful sometimes too. I mean, I'm not only doing lives. Like, going forward, it's not a plan to just do lives. It's just this week I've been in the mood to try it out. It's called experimenting. As the gentleman said earlier, it's my channel. Plus, I've noticed it works well for certain low IQ people. So I figure, why not add some high IQ competition into the space? Maybe I'll start talking about Yield Max every day as well. By the way, this is the Amazon brand energy drink. I'm not sponsored by Amazon, but I am invested in them. The Salimo brand. Those of you that have Amazon Prime, they're sugar-free. and low calorie, and 160 milligrams of caffeine per 16-ounce can. It's quite good. It's pretty similar in flavor to like the ultra white sugar-free Monster or the Silver Ice sugar-free Rockstar. Pretty good stuff. I'm an energy drink enjoyer. I drink coffee too. I have probably borderline unsafe levels of caffeine in my daily consumption, but it keeps me going, keeps me motivated, keeps me alive, feeling good. So with that, I'm definitely happy to be holding PayPal. Honestly, my big regret with PayPal is that when it was here last October, I was a little bit paper hands and I didn't just double my share count. That's my only regret with PayPal. I should have doubled it up right there. Like, and there was a part of me that said, it's getting really cheap. It's even, it was down like 16, 17% from even my cost, which is quite low. I was like, I should probably consider doubling here, but what can I say? I bitched out. I didn't do it. But hey, 100 shares of PayPal is enough. It's enough. If things go really well, I'll be happy I had them. So it's fine. What I really want to do is get up to 100 shares of Amazon before this gets back to 200. This thing is the beast of beasts, the moat of moats. It's the goat, you could say. It's got the goat of moats. It's the goat of moat. That's going to be, I'm going to trademark that one. Price to operating cash flow in the 17 range. Now, back in 2021, it was in the 30s. That's their price to operating cash flow. So that's before you deduct capital expenditures to get the free cash flow. So that was 2021. And in 2021, at different points, it was, in terms of price, at multiple points in the 180s, which is more expensive than today. So in 2021, you could have paid more for Amazon than you'd pay today for a stock that basically at twice the multiple. Can you imagine that? Now, the real goats got in when it was like $80 or something, right? This is when the real geniuses got in. Now, I think I had a price target when it was down here. I was like, oh man, if this hits 75, I remember thinking that to myself at the time. I should have just pulled the trigger because it was getting almost painfully obvious at this point. But hey, when it started to pull back a little off of that 200, I was like, okay, I'll slowly average in. If it dips a lot, I'll really load up, and I'll ride the next wave of Amazon into the future. This is one where I would feel if you told me the market, this is like the Warren Buffett cliche moment, where if it's like, if the market was going to close for 10 years. Yeah, so if the market was going to close for 10 years, out of any of those mega cap companies, the ones that go for the trillions in terms of market cap, I would probably feel the most comfortable hanging on to Amazon if the market was to close for 10 years starting tomorrow and then reopen 10 years from now. I don't think there's anything out there that is going to be able to erode their extremely powerful economic moat in that time. I think cloud's going to keep growing. And yeah, it's objectively, like, if they ever slow down CapEx or just make it a smaller and smaller portion of their revenue over time, it's cheap. They can produce an absolute metric F ton of cash. The likelihood of anyone else in the next few years doing what Amazon has done, because it took them a long time too. This wasn't something where it was an overnight success. This has been 20 plus years in the making. So it is just now starting to realize the fruits of the plans laid out by Jeff Bezos and all of the efforts of everyone before now. Yeah. So actually, I just recently started seeing ads for Amazon Pharmacy as well in the last few weeks, which is yet another reason, actually, why I ended up giving up completely on Walgreens ever turning around, because it's one more thing, right? If Amazon gets into the pharmacy space and it starts to go well and take off, anyone else that's in that space then has to try to survive the fact that Amazon exists in that space. How many traditional retailers have gone under because it's hard for them to exist in a world where Amazon exists? So, yeah, I think the days may be numbered for Walgreens and even CVS. I mean, CVS has Aetna to fall back on. That's a thing, but it doesn't bode well for traditional retail pharmacies that Amazon is getting into that. It's like, if I was them, if I was on their board or anything, I would be absolutely petrified and have no idea what to do. So, yeah, Amazon has the ability to do that in almost any area they want to. Oh boy. So here's all right, so Brett, I appreciate that question, because I think better than crypto for one reason. Not necessarily better than equities. I think productive assets like real estate, like even directly owned real estate, farmland, good high quality businesses are better than gold, at least as an investment and a generator or store of value. Because at the end of the day, yeah, gold is kind of just an inert thing, but the scarcity in gold and other precious metals is real scarcity. Why? Why is it real scarcity and the scarcity of crypto isn't? Well, if one crypto is supposedly scarce, well, it turns out anybody can make a new crypto. You can't. Now, I'm not an alchemist, and even though people have been trying to for centuries, human beings cannot simply go out and materialize a new precious metal into existence. But they can create a crypto that is basically, by every metric, including like the method of how you generate new coins, proof of ownership, proof of stake, all of that, identical in terms of like the code and everything to Bitcoin. If there are any of these other ones that are popular that people like for some reason think have value, you can make one that is identical, just give it a different name, but it's like functionally the same thing. And anybody can do this an unlimited number of times. There is no actual scarcity with crypto, not any actual scarcity. Now, if somebody could generate a new metal from nothing that was identical to gold somehow, then yeah, gold wouldn't be a great store of value either. But we can't just materialize new precious metals out of nowhere. And they do have actual, industrial uses and commercial uses. There's jewelry, but then there's also electronics, etc. So there is actual usefulness to them in the real world as well, precious metals, that is. So I would say a superior store of value to crypto, but I would rather have a productive asset. So would I rather buy gold itself or it be invested in some gold miners? There's that argument. But yeah, I'm not necessarily opposed to somebody having like a little bit of maybe like some gold in their portfolio as like a hedge or something. Because it does seem that gold has some benefits as a hedge against maybe inflation, because the gold supply won't inflate at the same rate as the money supply. People do mine for gold, but it gets harder and harder to extract more gold at a cost-effective way. So, yeah. Brett, do you think that answers the question well, or addresses store of value? Keem, my man, good to see you again. We got 2 channel members in the chat. What a day. What a time to be alive. Anything can happen on a Saturday. By the way, 8 p.m. Eastern, Ryan and I are doing a show on the Cashflow Kings live channel with Aria. So, Rumi, I do not try to do chart reading. I understand some of the indicators, the moving averages, etc., why people look at stuff like that. But I have found I don't have any kind of a knack for it. I think more or less my strength, if I have one, is probably focusing on the financial performance of a company, trying to understand what they do, how it fits into the overall economy, and where I think it's going in the next few years. I think that's maybe a simpler thing to look at than the chart reading stuff, which I think works to an extent because it relies on sort of the psychology of how large groups of people will act over time. And so you can maybe have a slight edge by understanding those movements. But yeah, I struggle to implement it, to be honest. My strength is my biceps. I don't know. I don't know if this shirt really accentuates them very well. But yeah, I mean, I have heard that I have okay biceps. Better delts, probably, actually. Maybe just better genetics for shoulders than for arms. I don't know. Decent genetics for both, though. Like they have a pretty aesthetic shape to them, especially when I'm lean. I'm not especially lean at the moment. Oh, Ryan, way to call me out, man. I'll tell you what, guys. If I hit 50 years old and my biceps are still getting bigger, you can probably guess what's going on. Yeah. Lifting for Buffett, yeah. Well, we all know Buffett's a DYEL. So, but it's okay. Lifting wasn't all that popular when he was young. Yeah, oh yeah. Yeah, Khmer is 100% natty. Khmer is 100% natty. And did you... But, all right. But, Brett, the problem is, since everybody knows how Bitcoin basically works, anybody that is in the business of creating new crypto coins could just make another Bitcoin clone and just call it something else. And what's to stop people from saying, oh, now this is the next great crypto opportunity? How is it functionally different? I can't create a new metal out of thin air with the same properties as gold. So gold is like tangible and real, and the scarcity is real, and the utility in the real world is real. Versus Bitcoin, which just really only has early mover advantage. There's nothing really special about it. There's tens of thousands of crypto coins that exist. I assume a few are Bitcoin clones. So yeah, that's just my view, though. I mean, granted, there are people, if you bought Bitcoin early and got that early mover advantage and, held it to today, you would be doing very well. So like I said, results are a hell of a deodorant. It might not have been rational or logical, but it has played out in the way that it has. So there you go. Khmer. Yeah. So if anybody's curious about this Khmer person Ryan's talking about, this guy is obsessed with yield max funds. Yield max. These are funds that they own options to create a synthetic position in underlying businesses. So Tesla is a big one. Tesla owns options in Tesla, which they then sell calls against. So they're selling options against options and doing a large amount of return of capital, calling it a dividend, and putting a sticker price of, oh, it's 80% yield. And oh, the 1 year return, negative 52%. So if the trailing 12-month yield was 83% of the current price, that's how this works, by the way, and the 1 year return was negative 52%, you lost more value in price or NAV erosion than what you got back in pretend dividends. It's a losing proposition. But people with extremely low IQs don't understand this. They see 80%, and so they take out debt to go all in on margin, and will probably be in bankruptcy within the next 12 to 18 months, if I had to guess. Oh, yeah, Brett, absolutely. That's just my way of thinking. I don't necessarily, I don't begrudge anybody that made a lot of money on crypto. If you did, then good for you. But the danger with crypto also is because some people have done really well, and anybody can pull up the chart on Bitcoin, right? And they can see interesting. No, that's, I guess, oh, this is stock analysis. They wouldn't have just a straight up Bitcoin chart, huh? Anybody can pull this up and see, oh, it's an all-time return of 13,000% almost. And it's easy to think, well, that must mean that it's a wise and good investment because the price went up a lot. The thing is, back here, very few people really had even heard of it, right? And it was around even before 2016, by the way. I remember when it was new. It was like, I want to say it was like 2009, 2010 or something is when it was first released. No, barely anybody had heard of it. Everybody was storing it on cold wallets on their hard drives and whatnot back then. If you got in back then, yeah, you very well could be a multi-millionaire by now. But now everybody's heard of it. and it seems to like just kind of hit these peaks and valleys and peaks and valleys. So if you're like if you know how to maybe read a chart and you can swing trade it or something, there might still be a way to make money on it. But like a store of value doesn't go to 64K to 16K in like this is like a year, right? A year and a half, right? That is not a store of value. This is a very volatile asset. Now, gold goes up and down for sure, but I don't think the swings are generally this crazy on gold. So that's just another kind of part of the point, I guess. So yeah, we did have a pancake cooking competition. I went with Kodiak for my my base for my batter, which has a higher protein content. Used Kodiak. I used the special 2% milk that they sell at Kroger that has a reduced sugar amount. It's like 3 grams of sugar per serving or something in it. So basically like a keto friendly milk. Not that I do keto at all, but I try to limit liquid sugar intake. I think that drinking sugary things is probably one of the biggest reasons that we have a morbidly obese and awful diabetic population. So Arya, I haven't really been active as a gamer in a while. So I historically through my life I have been a gamer. I wasted a ton of time in my teens and my early, even mid-20s gaming. But I don't find that fulfills me really the way it used to. And I think it was more because at one point in time, maybe I didn't really know as much of who I am. And so it was like a fun way to like kind of escape the reality of not really knowing who I am or what my purpose is. You could find a pretend purpose in a game. Now, I feel less compelled to do that. So this is just maybe a mentality shift over time. But not that there's anything wrong with gaming on occasion. I still may occasionally pick up one of my old games I used to love when I was younger for like nostalgia and give it a whirl. But I do not spend any significant amount of time on any kind of regular basis gaming anymore. It just doesn't bring me the same the same kind of feeling it used to. It doesn't activate the reward centers and stuff the way it used to. I feel much more rewarded doing YouTube, for example, or researching good investments, watching the chart go up and down all day, refreshing my brokerage account, or just pursuing other ventures, doing other types of planning, advancement in my career. Also, the lady friends and that kind of thing. Like I spend a lot of time I might otherwise be spending on games is probably spent with various lady friends. So yeah, I think that is almost objectively a more fulfilling and fun use of the time. So, I mean, I've known people that would rather game than hook up with a girl, but I'm not one of those people. So there you go. Plus, I mean, it's hard for me now to keep up with all of the current most popular games, and I don't have the reflexes I used to have, right? I'm not going to be able to pick up like a Call of Duty game or whatever and actually be competitive at it I'm past my prime peak years for gaming anyway. You forget your boy here is 36. So I'm well past the point where I'm going to be able to get insanely good at any game that requires any type of really, really steep learning curve, reflexes, a lot of competitiveness online, that kind of thing. I'm just not here for it. You're saying it's not wasted time, huh? Well, we can agree to disagree there. I mean, I don't blame you for still liking to game at your age, for sure. I think I think it can be a fun outlet and all that stuff. Now, I might when you'll have to tell me GTA 6 isn't actually out yet, right? That's one where I might pick it up, because when GTA 5 first came out, I did lose like 2 or 3 weeks of time. Yeah. Okay. Yeah, I might get that one. There are certain things that if they come out, I might, pick it up and play. But just don't expect me to be like a serious hobby gamer anymore. Yeah. Yeah, you guys can play your Fortnite and all that. Hey, don't be late for the live show on Cashflow Kings Live. Tonight at 8 p.m. Eastern, by the way. Arya and Ryan will both be there. It's going to be a heck of a show. Oh, Fortnite greater than investing. No. No, you're wrong. That's fiction. Never happened. Let me see here. Oh, I guess one last kind of funny thing that happened end of this last week here is Intel popped 9%. Now, granted, let's see. Yeah, my cost average is, it's like right around 34 or something like that. So, yeah, it's still pretty bad for me. Now, doesn't it suck that I had a chance to get out at over $50, and at that point I was like, oh, okay, it's finally kind of back to sort of its appropriate valuation, and then of course it just craters. Now this 9% pop, maybe this is like my opportunity just to cut my losses. I don't know. I've been thinking it over. What do you think, chat? Cut losses on Intel, or stay the course and wait it out? I expected not to get a real return on it until like 2027, and it's not 2027 yet. But do we think that it's going to crash and burn and just completely circle the drain before then? Happy to hear any opinions on that into chat. I will say, and this is absolutely bizarre, but we're at a 0.8 price to book on Intel right now. So hypothetically, their assets are actually worth more than the stocks, and then this is counting even debt and everything, are worth more than the stock trades at today. It's funny. All right, Richard. You think they're going to actually separate Foundry? Because some of the speculation has been that if they're separating Foundry, it might also mean booting Pat Gelsinger, because the Foundry thing is like part of his whole game plan, right? But I do agree that if they end up doing the thing where they separate foundry, like IPO it, spin it out, whatever it is you want to call it, and they send a bunch of the debt with it, I think the market will like that. I don't know if that's better for their like 5-10 year plan, whatever, but the market probably will like it. And I do think if it goes back to like 50 plus, I'm probably gonna like, you know. Yeah, there is no, I mean, Morningstar says there is no moat. I don't know if there's no moat, but if there is one, it's certainly narrow. There's just, they're not, maybe after Foundry, like they actually get something done with Foundry and it actually has some customers and is working at some level, maybe then they have some kind of a moat. But yeah, I more or less agree that maybe they don't really have a moat at the moment. Um, yeah, the Mobileye spinoff was stupid, honestly. They picked like a dirt ass poor time in the market to do that too. Like everything was beaten up when they did that IPO. I don't know, and what did it raise for them? Like $1 billion. Oh goody, 1% of the capex of the 5-year capex for Foundry. Oh boy, what a big difference that made. Oh, it might have covered the shitty 1% dividend that they just got rid of for 1 year. Oh wow. Thanks for IPOing Mobileye, guys. What a way to unlock shareholder value. Yeah, that was a stupid move. Stupid move. What do we think Dan is doing? As in dividend Dan? He's probably on X tweeting or whatever, you know. Getting that engagement up, or maybe he's gaming. You know, I think you guys have gamed together before, right? Maybe he's on the Fortnite or whatever the game is that you guys are into these days. Pat talks so much. It sounds like a used car salesman. Super dislike him. Yeah. Pat. All right. So there's a food chain, like a grocery store chain in the Midwest called Woodman's, and the guy that like founded it or whatever back in the day, his name's Phil Woodman. If you can find on YouTube any of their like old commercials with Phil, Pat Gelsinger reminds me so much of Phil Woodman. It's ridiculous. I know that's going to be like a really niche thing, but I encourage, like, search the internet, see if you can find anything just like side by side, like that salesmanship. It's like identical, and like they look alike too, like they could be related. It's funny. Did you look it up? But yeah, I don't know that I dislike Pat, but like I don't know. I think Intel probably has some serious bloat. The fact that they're saying they can lay off 15,000 people. Now, are those people technicians, engineers, valuable people that actually produce, or are they like middle managers? Like that's the question. If they're eliminating pointless stuff, like the person that writes the company newsletter, how indispensable, like yeah, like that stuff. The HR department, we need that to be robust. Like there's all kinds of make work jobs at big corporations. Now, if the layoffs were like all that kind of stuff, and you know, how many VPs do you really need? to run a business. I think a lot of companies get really heavy on VPs and directors that they don't need. So, yeah, if they're good cuts of people that are paid a lot to produce very little, or it's redundant, extra unnecessary layers of management and that kind of thing, that makes sense. But if it's like, oh, we're going to get rid of, our best technicians and engineers and scientists and such, well, that's the wrong way to go. They talk about tough choices and all that. It honestly, like, if it shouldn't be a tough choice at a company the size of Intel as to how to trim down your workforce, it should be an easy choice. Granted, they have to say the tough choice thing, but that's just my internal monologue on the topic. It should be pretty easy to figure out who has to go. Every company, to an extent, wastes resources with unnecessary make work posts. I mean, they have 124,800 employees. You can't tell me that to lay off like 12% of them or whatever it is, it's that's so hard to find that. No, there's some waste going on there, like an egregious amount, I'm sure. But yeah. Oh, by the way, don't trust data feeds for your dividend information unless you know that they're going to be keeping on paying it going forward, because this dividend's gone now, but the data feed still says there's an annual dividend. Just be cautious of that. And don't be so hyper focused on something like dividend. Don't be a yield maxer and only think about that free income that you're going to retire on. Think about it as a whole business, right? You're trying to be a part owner of whatever it is that they're doing going forward. And sometimes it's not wise to pay out a dividend. Like, I wish people would be a little bit more open-minded about companies temporarily getting rid of dividends in order to do other things. But, like, could you imagine, and this is a thought exercise we've done before, but I know people expect dividends from tobacco companies, but could you imagine British American Tobacco suspending their 8% dividend temporarily, like a year or two, okay? And doing buybacks at 6 times free cash flow and just buying back 7-8% of the shares every year for a few years, what that would do for shareholder value, it would be tremendous. It would be glorious. Now, I'm not against the dividend. I'll take it. I have several hundred shares of British American Tobacco. I'm very happy to have this stock. I think we could see multiple expansion to maybe 10 times free cash flow to match the near peer Altria group. But I would love to see them be aggressive on the buybacks while it's this cheap, so that it's even better when they get back to a fairer valuation. Dollar General. Okay. By the way, I'm going to call it maybe like a 6 or 7 minute warning because I haven't had lunch yet and I have Cash Flow Kings live in less than 3 hours. Got to prepare for the show. So yeah, Dollar General. Interesting. Yeah, Dollar General, I mean, this is one of those that looks cheap, right? But is this another Walgreens situation where it looks cheap, but actually it's going to be bad? So, I mean, this payout ratio is going to be calculated in terms of net income. Is a 36% payout ratio out of line? You tell me. Now, granted, considering that they look cheap, yeah, would that money better be used, be used more efficiently for buybacks? Probably. Do I want to be on the Dollar General journey? Probably not. They can't do share buybacks, or they're just choosing not to. So I think actually the reason that they're not doing buybacks probably has more to do with the $16.9 billion in net debt. I suspect that that's a concern. I mean, even with that low payout ratio, even if they aren't, hitting the buy, they've got to be a little bit concerned about that large amount of net debt. Net cash per share, negative $77 versus an $82 share price. Ugh, that is a miserable balance sheet. Or, I've seen worse for sure. There's companies with more leverage out there. Telecoms probably look worse on that metric, but it's ugly. It's ugly, and it's retail. I wouldn't necessarily call this a moat, right? And these are retail margins. Wow, it's really crazy. Huh. Wow, can you imagine? Wow. So profit margins of 6-7% are actually absurdly good for brick and mortar retail, believe it or not. But they're not that level at the moment. They're more like 3.5%. But the problem is, that high leverage with a 3.5% profit margin, it's dangerous. It's dangerous. Things only have to go wrong for a very short amount of time for this to be very bad. But one thing I do want to highlight, though, is when you compare that to what we think of as a high moat brick and mortar retailer that we don't worry about at all. Can you imagine? Look at these margins for Walmart, right? Same thing, profit margin. So this is based on net income, same as what I looked at with Dollar General. The best they ever did was a little bit under 5% in the last 5 years. In a couple of quarters, they did that. But typically, we're at 3%, 2.5%, that kind of range for Walmart. Yeah, I have been inside Dollar General, Dollar Tree, the Dollar, Family Dollar, or whatever. I've been inside that type of store a few times, and yeah, it's absolutely horrific. Only when it is basically desperation and it's the closest thing and I don't want to go any further for something better, I will slum it and go. But could you imagine if Walmart had 6 or 7% profit margin? That would be just ridiculously good for them. But they get by on these razor thin margins due to the economies of scale and stuff they have, and that's kind of their moat. They can compete on prices and put the little guy out of business. Dollar General will go up in neighborhoods that even Walmart won't go into. To your point about it being a rough shopping experience. So I spent actually a lot of the early part of the live talking about Grab before we really had anybody in here asking about different topics. So definitely encourage you to go back and watch the on-demand replay, whatever, the recording when it's over, if you want to catch that. Or if you have something to add about Grab, I'm more than happy to get back into it. Although I am supposed to get off of here in a few minutes. So, but yeah, the other, like, I guess final point on Walmart is, okay, their profit margins, their net profit margins, 2.5-3%, pretty typical for them. Okay. Everybody out there, from like a political perspective, of a certain persuasion, will go around telling you that Walmart makes all these billions and billions of dollars and doesn't pay their employees enough, etc. Okay, when your margins are like 3%, if you give 2 million employees a raise, you're no longer profitable. And this is just one of those things where when people get political about being, anti-corporate or whatever, logic, the profit motive, etc., they think that it's greed central, and they're gouging the consumer and underpaying their employees, etc. They're getting by on 2.5 or 3% margins. That's not excessive greed, in my view. It seems that they're trying to be as efficient as possible in order to, compete on price, sure, to get people in the door, and also to minimize expenses. I mean, it's capitalism. It's like pure. It's how capitalism is supposed to work, actually. And I often always see people, they'll quote, Walmart made $100 billion in profit. Oh, that's gross profit. That's before any overhead. So this is what they make before they like pay all those employees, right? Before they spend anything on literally anything else, any operating expenses. Okay. So yeah, they make that much gross profit, but again, like the narrative that, all these companies are just like pure evil, taking advantage of their employees and putting good, honest people out of business and stuff. It's like, I think it's overblown. I don't think they're quite as, I've even seen documentaries. There's one that came out, probably a good 15 years ago now, called The High Cost of Low Prices and stuff. And they, they definitely tried to paint a picture about Walmart, but I mean, every major corporation has some aspect to it that you could find exploitative, unethical, immoral, if you look hard enough and deep enough into their supply chain and everything. So, yeah, so please do not try to tell me that I'm a bad person if I, for example, shop here, or I don't really like shopping at Walmart, but Sam's Club I like. Or if I invest in the company, which I don't invest in Walmart. I invest in Amazon, which, they're evil because they make the drivers pee in bottles. So there you go. Yeah. All right. I'm glad to see that you guys, yeah. So it seems like you guys kind of see where I'm coming from on that. So I'm about to get into my wrap up spiel. So 1, I appreciate it if anybody that's still watching here were to subscribe to the channel. It definitely helps me out. I'm trying to get to 3K. Also, follow me on the Twitter or X platform. Link in the description there. I have a Discord, which is always going to be free for discussing stocks outside of these streams. That's a great place to talk back and forth. I'm also going to be on the Cash Flow Kings live at 8 p.m. Eastern, so about 2.5 hours from now. The link to that channel is also in the description. As always, I really appreciate you guys joining me and having a fun conversation today about many different stocks, not just the ones in the title and the description. I personally enjoy this a lot more than gaming, so I hope to keep doing it more often. These live streams this week that I've experimented with have been a pretty good success. I've enjoyed them. I think you guys have enjoyed them. So I plan to keep on doing them at some level. I might alternate maybe between lives and like pre-recorded stuff. We'll see how it goes. But anyways, Thank you all for joining, and I will see you again soon. Take care.